Cryptocurrency is an exciting new world. Think of it like a giant, thrilling roller coaster. One moment you are climbing high, feeling the rush of new peaks. The next moment you might be speeding downwards, your stomach dropping with the price. This up and down movement is what we call volatility. It is a core feature of many crypto assets, especially the newer ones. Understanding this volatility is the very first step. This rapid change can be a source of great opportunity, but also significant risk if you are not prepared for the ride. This roller coaster, the crypto market, does not have scheduled stops or a predictable track. It runs 24 hours a day, 7 days a week, all year round. News from across the globe can make it swerve unexpectedly. A new technology, a government announcement, or even a widely shared social media post can send prices soaring or tumbling. So, if we are going to ride this crypto roller coaster, we need seatbelts. We need tools and strategies to keep us safe. These tools do not remove the thrill. They help us stay in our seats even when the track takes a sharp turn or a sudden dip. Why is managing risk so important in the world of cryptocurrency? The answer is simple. It is about protecting what you have. It is about ensuring your journey in crypto is sustainable. Without risk management, you are like a sailor setting out into a stormy sea without a life raft or a compass. You might get lucky, the storm might pass you by, but if the storm hits, and you are unprepared, the consequences can be severe. You could lose your investment, you could lose your confidence. Risk management is your plan for dealing with these potential storms. It is your way of saying, I understand the risks, and I am ready for them. The crypto space is still very new. It is like the early days of the internet. There is incredible innovation. There is also uncertainty. Prices can be influenced by many factors. These factors are often hard to predict. This makes the market very dynamic. Managing risk helps you stay calm when others panic. One of the most fundamental tools for managing risk is called diversification. You have probably heard the old saying, don't put all your eggs in one basket. This is exactly what diversification means in the world of investing. If you put all your money into a single cryptocurrency and that cryptocurrency's value drops significantly, your entire investment is at risk. Diversification means spreading your investments across different assets. In crypto, this could mean investing in several different cryptocurrencies. For example, instead of putting all your funds into Bitcoin, you might also consider investing in Ethereum or other projects with different use cases or technologies. The idea is that if one of your investments performs poorly, other investments might perform well, or at least hold their value. This helps to balance out your overall portfolio. It reduces the impact of any single negative event. It is a way to smooth out the bumps in your investment journey. Think of it like a sports team. A good team doesn't rely on just one star player. It has many players with different skills. If one player has a bad day, other players can step up and help the team win. Your investment portfolio can be like that team. Section 4. Setting your safety net. Understanding stop-loss orders. Another powerful tool for managing risk, especially if you are actively trading, is the stop-loss order. Imagine you are climbing a mountain. You might use a safety rope. If you slip, the rope catches you and prevents a long fall. A stop-loss order is like that safety rope for your investments. It is an instruction you give to an exchange to automatically sell a specific cryptocurrency if its price drops to a certain level. This predetermined price is your stop price. It helps to limit your potential losses on a particular trade or investment. It is a way to protect your capital from severe downturns. The beauty of a stop-loss order is that it works automatically. You set it up in advance. You decide the maximum loss you are willing to accept on that specific investment. If the market price reaches your stop price, the order is triggered and your crypto is sold. This removes emotion from the decision-making process during a stressful market drop. When prices are falling fast, it can be hard to think clearly. Section 5. Fort Knox for your crypto, the shield of cold wallets and security. Beyond managing market risk, protecting your crypto from theft and loss is absolutely crucial. This is where security measures, especially cold wallets, come into play. Think of a bank. You have a checking account for daily transactions, like a hot wallet. But for your most valuable treasures, you might use a safe deposit box in a vault, like a cold wallet. A cold wallet is a cryptocurrency wallet that is not connected to the internet. This offline storage makes it incredibly difficult for hackers to access your private keys and steal your funds. It is like keeping your gold in a physical, offline vault. The most common types of cold wallets are hardware wallets. These are small, physical devices often resembling a USB drive. They store your private keys securely within the device itself. When you want to make a transaction, you connect the device to your computer or phone, sign the transaction on the device, and then the signed transaction is broadcast to the network. Your private keys never leave the hardware wallet. This means even if your computer is infected with malware, your keys remain safe. Examples include devices from companies like Ledger or Trezor. Section 6. The Neverending Journey, Staying Sharp in the Crypto World. Mastering crypto and managing its risks is not a one-time task. It is not a destination you reach and then you are done. Instead, it is a continuous journey of learning and adaptation. The cryptocurrency space is incredibly dynamic. It changes at a breathtaking pace. New technologies emerge, new projects are launched, new regulations are discussed and implemented around the world. What works today might not be the best approach tomorrow. Therefore, staying informed and committed to continuous learning is perhaps the most important risk management tool of all. It is like keeping your map updated while exploring an ever-changing landscape. This means you need to actively seek out reliable information, follow reputable news sources that specialize in cryptocurrency and blockchain technology, read books and articles, listen to podcasts from knowledgeable experts,